Now let's quickly go to another activity whereby we'll be revising again the production cost statement together with the notes. So sometimes the note will not be required. So if the notes are not required, please show all your calculations on the face of a production cost statement. Now with me, I have a question paper in the books of Cape Chocolate. Okay. You are provided with information relating to Cape Chocolate for the financial year ended the 30th of June 2012. The business is owned by a Mary Muller. Prepare the following for the year ended 30th of June 2012. The factory overhead note to the production cost statement and the production cost statement. And it says where notes are not required, show calculations in bracket on the face of the production cost statement. Right. Now let us start with the information. In this case, we are only preparing the note number 3, the factory overhead. Factory or manufacturing overhead. Cost. Do not forget, I said the easiest way to start this note, we have to start with the indirect material and the indirect labor. Indirect materials cost. Now let's go to the information. Right. Stock balances. We have been given the beginning of the accounting period, which is the 1st of July 2011, and the end of the accounting period, the 30th of June 2012. When we start, we are starting with the opening balances. So in this case, we are preparing the factory overhead. Now we are looking for the opening stock of indirect material stock. So on the 1st of July 2011, the opening stock was 7,200. Now we are starting with the opening balance. 7,200. Do not forget to say plus the purchases during the year, if any, if we do have any purchases, right? Okay. Now let's go to information number F. Information number F. Indirect material purchased 56,000. Note that stocks are on hand at the end of each year. See information number 1 above. Now 80% of the indirect material were used in the factory and the rest in the office. But first we have to calculate the total indirect materials by adding the opening stock with the purchases and less in the closing stock, unused indirect material at the end of the financial year. So our purchases in information number F is 56,000. Now we are looking for the closing stock. The closing stock is 7,500. Now we say minus 7,500. Let's add and subtract. 7,200 as opening stock plus the purchases of 56,000 minus the closing stock of 7,500 to get the total consumed in the business. But the information says 80% was consumed in the factory. So do not forget we are preparing the factory overhead. Now we have to say multiply by 80 divided by 100. Multiply by 80 divided by 100 to get the total indirect material consumed in the factory as 44,560. Now let's move. Okay. Information number A is for the raw materials, direct materials. Now let's go to information number B, the factory rent paid. Now the factory rent 68,500. It is 68,500, right? Now number C is advertising. Advertising is the cost in the selling and distribution cost, not in the factory overhead or in the factory. Now let's move to D, meaning that we are not going to consider the number C. We are not preparing selling and distribution cost. Factory maintenance paid 46,700. Repairs to the amount of 1,300 were completed in June 2012, but will only be paid in July. The amount is paid, 1.3 is payable, 1,300 is payable, still to be paid. But because it is used in the current financial period, we have to add it. So now we say maintenance 46,700 plus 1,300 to get the total maintenance for the year. 46,700 plus 1,300. The total factory maintenance is 48,000. Right? We move to E. Water and electricity paid 80,000. This amount is to be split between the factory 70% and the office 30%. Now we say water and electricity. Water and electricity. The total is 80,000, but 70% consumed in the factory. So we say multiply by 70 divided by 100. Let's do it. 80 multiply by 70 divided by 100 to get the total of 56,000. Water and electricity in the factory is 56,000. Now let's go to number G, the depreciation. Factory machine. Right. Depreciation will written off office equipment and factory machines. We are preparing factory overhead, so the depreciation for the factory machine will be 12,800. Not the depreciation for the office. We are not doing administration cost. So we are taking the factory depreciation as 12,800. Right? Okay, let's go to another page. Okay. Number H. Right. Sundry expenses paid 21,000. This must be allocated according to the floor space used. The ratio of the space used by the factory, office, and sales department, 4 to 3. Now we say 4 plus 2 plus 3, the total will be 7. Right. Now, when we calculate the sundry expenses for the factory, we are saying 21,000 multiplied by 4 over the total of 7. Now we go to the sundry expenses. The total is 21,000, but it's allocated according to the ratio. Now we say multiply by 4 over 7. Let's calculate. Multiply by 4 over 7 to get sundry expenses of 12,000.